Hi, welcome back to the Life Insurance Storytelling Series, where for the last, I want to say 7 sessions, we have been covering an actual strategy and we are in the illustration of that strategy. This is session 13. This is actually part G. So you want to backtrack if you want to catch up with us, because we're on the fast track and we're gonna keep going. You're encouraged to note any questions that you may have. Feel free to contact me direct, and I will be happy to have a one-on-one with you based on you being able to formulate questions from these sessions. All right, let's get it. We're now on we have progressed to the ledger page. And the first ledger page is demonstrating to us, remember, guaranteed illustrated rate, alternate illustrated rate, and current illustrated rate are things that we were introduced to on page 1 of the narrative summary, where I told you, and we're going to circle back to that. It'll come full circle in later pages. We're here now. So the first ledger page, we're looking directly at the guaranteed illustrated rate. And what it's demonstrating is at a illustrated rate of 4.1%, how this entire strategy will work out. So you see the column headings are going to be consistent for quite a few of the future pages. Policy year, the age, planned annualized premium, which in our strategy is a reflection of those IRA dollars that are transitioning over to a life insurance policy. The planned annual income that is designed specifically in this illustration and demonstration to come out of the policy starting in year 2. And the planned annual loan that shows you basically how that planned annual income is being provided for. The accumulated loan amount, that is exactly what it says. The accumulated value is the actual value in the policy. The cash surrender value figure is a reflection of what, based on the previous columns, would be provided to the insured or policy owner should they cancel the policy. And then the net death benefit, and all of that is showing you what that would look like on an annual basis using the guaranteed illustrated rate. Okay, and you see, as we were informed on the narrative summary, using the guaranteed illustrated rate and this design of pulling out cash the way that we're using it. Remember, we were pulling out cash to pay off the taxes, right? Because that was an IRA. This policy will lapse in year 16. See how much detail is provided to us? Moving on, that next page incorporates then the alternate rate and the alternate current illustrated rate, and then the current illustrated rate, where you see those middle columns are based on 4.1%, and then the last series of columns are based on 5.38%. And so now you have a comparison of what that would look like based on the exact same design and objectives. So those first few columns are still showing the money coming out, what's going in and what's coming out. And then the last columns then give you how that would impact the values, the accumulated value, the cash surrender value, and the net death benefit based on these illustrated rates. All right. The next ledger page continues the demonstration, because what this is showing you, it shows you that with that alternative rate, it reflects that lapsing in the year 16, but with the illustrated rate, it shows how it progresses through and what those values look like throughout year 59. Okay, age 120. Now, what I want to refer you back to, when you may have a question about the alternative current, the alternative current illustrated rate. If we reflect back, when we were looking at all of the explanations that introduced these ledgers, these numbers, all the way back to page 8, where page 8 gave us a plan description that actually introduced us to the 3 different loan options. The alternative current illustrated rate is defined or explained there. So this is how I just want you guys to see how important these illustrations are and how everything explains everything that's in it. There's a note on that page 8 that tells you why that alternative current illustrated rate is there. Okay, so that's why I just want you guys to make sure that you understand that all of these pages are not irrelevant. They all tell the story, define, and answer your questions. Okay, so I want to thank you guys for tuning in to this particular session, where we took a look at the values and how the values can be impacted by the different interest rates that are available from the insurance company. And so if you have an illustration that you have any questions about, please do not hesitate to contact me direct. If you are now even more curious about this particular strategy, where we have taken an IRA and basically converted it into a life insurance policy, thus, of course, significantly multiplying the value of the death benefit to the heirs, and even taking care of all of the or some of the tax implications associated with not just the IRA by itself, but repurposing the IRA. I can be reached. My contact information is available to you on the screen. Thank you again. Tune in next session where we will continue and hopefully close out this illustration demonstration.
That ain't right.